And if the shark happens to swim directly at you, you should gather all your strength and courage and hit him on the nose. And hopefully the shark turns and swims away. In the world and in Zimbabwe, there are many sharks, and they circle you. And just like the Navy SEALs, if your intention is to complete the swim, then you have to learn to deal with the sharks. I like the motto of the SEALs, which is similar to the Zimbabwean story of the last 2 decades, which says, the only easy day was yesterday. And I think that's true for so many Zimbabweans because the situation has deteriorated over the last decade especially. Even since dollarization, it's still very tough for Zimbabweans. And they have to look back and say to themselves, surely it can't get this much worse. But jokes aside, how much more can the situation deteriorate before it bounces back? My view is that for those of us that are in the country, we are in the perfect storm, and we've passed the point of no return. We're invested with boots on the ground. We have tens of millions of dollars of capital invested in Zimbabwean real estate.
If I can just interject, I want to give some of the panelists time to interact. But if someone is reading the theme of this conference, which is how long is a long play or how long is a long game, you're talking of patience. For how long can we be patient for those rewards? Is it worth it, given the context of other 50 markets in Africa? Maybe in a minute, and then I'll ask someone else to come.
If I may take that, Ray, with relation to Zimbabwe, I think, to put it in context of American football, we're in the fourth quarter. The game is not won yet, but we're in the fourth quarter. And it helps to be in the game within the fourth quarter. So the long game, the worst, I believe, in my opinion, has been behind us. We are right in the dawn of a new era. And I strongly believe, from what I've seen of being on the ground, is that we are right in the fourth quarter, heading to a winning streak with no extra time.
Okay. So while you're on that, how is the situation different from 2013 or 2014? How do you know you're right at that point where the change is about to happen to allow for business?
Well, if I look at
what are the catalysts?
Well, 2013, there was a lot of that irrational exuberance, like you were saying. It was, people had seen the 2008, and everybody was anticipating that, well, we've seen the worst, now people were getting a little too irrational, and they were pouring in, but we were still going through the phase of GNU was working, and now we're getting our churn, as we say, getting our feet. Then we had the change of government, obviously. Now things started happening on a new path, like Mr. Ambassador has said there, when they came up with the new Zim asset. Now it said, okay, well, how can we do business better now that we've known what has happened in the past? From an investor standpoint, what we saw that it was actually the time that we came into Zimbabwe, because we noticed that there is that change that's going to come. Okay. So that's when we entered into Zim, and what we've seen again, we thought we were at the bottom of the trough, but it went slightly deep. But now that I'm saying is progressively in certain industries coming back up. So
okay.
If you stand your ground, there is a return at the end of it.
Okay. I mean, some of the participants might just take what you're saying with a pinch of salt to say, these are people who are heavily invested in the situation. What else can they say? But anyway, let me come to Candice, because Candice has, as I said, she has an Africa view, and perhaps she lacks those nationalistic tendencies. So perhaps give us an overview of the markets and returns from the conversations that you're having with some of your clients that are looking at Zim.
So I just want to frame, and moving on from what the other panelists have said, Africa is not for sissies. Let's make no mistake that I think we all have to learn to be Navy SEALs from one day through to being present in an audience like this and being able to carry ourselves and identify who the sharks are, potentially. I think, I'm literally sitting listening to the Honourable Ambassador speaking. We're sitting in a situation where the Kenya election has just been declared as null and void, and they will be going through that entire process. And we have a number of colleagues in Kenya who are both directly affected by that, but also intricately a part of sharing the right communication. So talking about Zimbabwe and talking about the context that we play in all of the communication about the markets that we deal in, we're sitting talking a lot about what the opportunities are in Zimbabwe, and I think that the ambassador was able to share a number of examples of incredible opportunities that exist. But we're sitting with the lens of where to invest and how to invest and what perspective are you coming from. So our role is, a lot of people know quite a lot about Zimbabwe in this room. It's about what we do when we leave this room and what are we communicating outside of these four walls that allow us to share what is actually going on. What is the real story and what is really going on in terms of, if I am going to go into the IPP play, what do I need to know, and am I getting all the information around that specific investment opportunity that I need in order to make that successful? Because I think if we look at it from a sovereign macro lens in Africa, we only and perpetually hearing negative, personally. So I think our exposure from a country perspective right now, we're doing a lot in Nigeria. It's complex. It's incredibly complex from a currency perspective. It's incredibly complex from a commodity perspective. But what's so fantastically, passionately drives me crazy, and there's an interesting octopus analogy to this, is you've got commodity issues on the one hand that are so completely contrastingly different to the opportunities that the Honourable Ambassador talked about from an agricultural perspective. When we start talking about your brother, Zambia, from a Zimbabwe perspective, it's still your brother. And in fact, it doesn't matter who the big brother is right now. It talks about the fact that you've got different opportunities from both regions. And I think that it's our role as Africans to be able to communicate what those opportunities are and where to make the right investments in order to get the right returns.
Okay.
So very broad.
Thanks so much, Candice. I think you've moved now into the second part of the question that I wanted to bring to you, Ken, which is, when you're looking at a multi-asset investment strategy, where are you seeing the returns? Vis-a-vis, you've got equities, fixed income, infrastructure, real estate, industrial, and residential, commercial, as you're doing with Moz. So probably just give us a very high-level understanding of where are you seeing the returns?
Sure. Taking off my real estate hat as a developer and looking at it purely pragmatically and practically, I think you have to take history into consideration. We came from a zero-base economy in February 2009. Our economy had reached the absolute disastrous hyperinflation of modern-day history, where the economy was completely wiped out. The capital base of the banks was $28 million of deposits cumulatively for all the banks. So we had to start from a zero base. Today the banks have about $5 billion of capital. So we have improved significantly since 2009. And although it's a long game, it has made a lot of progress.
Yeah.
That capital has to find a home. And currently, the constraints that we have from a trade deficit perspective, we export $8 billion, we export $4 billion, and we export 4 and we import 8. So we have a $4 billion deficit that has to be funded from somewhere, and we don't have a central bank that prints its own currency. So that creates a huge dilemma that economists cannot actually answer. But it has created a huge waiting list of foreign currency payments in the Reserve Bank, and this is currently, in my view, the biggest challenge in the economy right now.
Yeah.
Therefore, all domestic capital in the market has to find a home, and it's obviously going to find a home on the stock market. It's the most secure investment. And just looking at the stock market performance this year, just yesterday, industrials hit an all-time high. This year alone, 62% since January increase on that industrial portfolio. I'm not a stock market expert, but it's not nuclear science to figure out that Old Mutual, which is duly listed on the JSE, the LSE, and the ZSE, is trading at a 50% discount in London today. If you bought shares today and sold them tomorrow in Harare, you get 100% premium.
I think that trade is overcrowded with a lot of Zimbabweans in South Africa buying Old Mutual shares in South Africa and trying to dematerialize them into Zimbabwe, because in Zimbabwe they almost have a 30% premium. So essentially you actually have got a 30% increase.
So if that's not an opportunity, I don't know what is, but I don't want to talk today about the ZSE or Old Mutual. I just want us to look at the top performing index this year, which is the Agri-Industrials Index, and it's 104% up from January. So that's double. And there's a reason behind that. I think what the ambassador said is exactly true. Agriculture's got to be the hottest opportunity in Zimbabwe at the moment. It's a perfect climate, good soils, abundant water, and there's no logic reason why Ukraine should produce maize at 3 times less than Zimbabwe. That's the difference in the selling price, 3 times. It's not 30% or 3%, it's 300%. So there's huge margin in those kind of opportunities. And it is a simple matter of supply and demand. And the latter, the demand not being the issue, the only real way we can expect to see prices becoming competitive on the global arena is by attracting significant investment and funding those small growers, both small and large growers, I would say. You know, they both have requirements of inputs. And that funding is required and critical for entering into those contracts that the ambassador referred to.
Yeah. Okay, so let me just switch to Candice. Candice, so you're hearing Ken is talking about a 60% year-to-date, 60% increase in the industrial index. Obviously, this is irrational. Is this sustainable? Isn't this just a flight to safety? What does it mean for the markets?
So I think the key that Ken mentioned was you've got capital that can't go anywhere else.
Yeah.
And I think that is really the crux of the issue. I've attended a number of African events this year, one in Zambia not too long ago and previously in Botswana. And it continuously comes up, there are actually not enough assets to be invested in. So we're caught with this conundrum where there's enough capital, but domestic capital, which really is the focus, I think. And where can it go? So I think, you know, you and I talked about this yesterday, but I think in an inflationary environment, you've talked to and alluded to the currency situation and the fact that you can't carry on printing money. It is an economist's nightmare, because how do you forecast? How do you actually do all of your planning? You're in a position right now, flight to safety, stock market, trusted. We connect to stock markets all over the world. You know, for me, there doesn't seem to be too many other options. I think at your conference 2 years ago, and I believe this continues, and you can probably talk more to this, but from a private equity point of view, I feel like that has been where most people have been engaging.
Yeah.
So I'd be interested to know a little bit more about the private equity type returns that people are seeing.
Yeah.
Not easy to get that information, so that's why I'm interested.
So before you punt private equity, I just also want to hear from you, what are the drivers of growth in private equity? Because obviously it's not revenue growth. Where are you guys earning returns if it's in private equity?
Yeah, from most of what we've invested in manufacturing and mining, but what we've seen in the last year, the gold mining is where we've been getting the highest returns, because if you notice, Zimbabwe is under-surveyed and under-explored. So there's been a lot of areas that have, we are in the Midlands area that are showing a lot of very high returns for a small level of capital investment. And we think if, you know, for focus in areas like that, there's a lot of low-hanging fruit in that area, and we've been getting a tremendous amount of return. So I would say in the commodities, and we're only talking about one of the commodities. We're only talking about the gold side, the platinum side. And I was talking to a gentleman in Dallas while I was in the States, and they did a survey of their own and realized that there are some lithium reserves. As we speak, they are trying now to partner with the Tesla guys to see if they can now go into that side. You know, that's something I didn't even know Zimbabwe had, and as our group didn't even explore that side. So you have some of entities where there's private explorers, they do their own programs, and then they discover something. So the opportunities there. First, in commodities, I say there's a lot of returns there. There's a lot of space that is really not being occupied at the time.
And are you investing equity, straight equity, or this is like private debt for these small miners, or are you assuming controlling stakes?
What we do, our firm, our investment strategies, we want to have a controlling interest. So when we go in, we take the medium to high scale. By medium, I mean anything that is an asset base of about $500,000 to 5 million tops. And then we, as long as we have at least 51% controlling interest, we fund the project. We have done areas where we end up buying the entire entity, where we saw some low-hanging fruit, undercapitalized, underutilized mines that all they needed is just a right management strategy and a capital mix, and we've gone into those and taken those over, and they've been doing tremendous for us.
Yeah, is this for long-term holding or just?
Zimbabwe really is for the long game. You know, yes, you will get the quick returns, but our strategy is to go at least five years and above. Yeah. You know, so that's what it's a long game plan.
Yeah. Okay, let's just switch gears a bit, and then Kenny, could you talk to us about some of your real estate, some of the work that you're doing, and maybe have a very frank conversation with us in terms of what kind of returns are you seeing and what kind of risks are you encountering in that?
So how secure are these four walls? Of course, my core business is not agriculture, it's real estate. And when we started in 2008, at the height of hyperinflation, to acquire land, we both acquired it privately from private holders and government, and entered into several government relationship transactions, one of which was quite contentious and controversial, the Airport Highway Road that we built a $70 million highway in exchange for government land that was owned by government as a barter deal. And it took a lot longer. You know, it took like 8 years to complete a transaction that should have taken 8 months.
Sure.
So having said that, when we entered, of course, you know, we came off a Zim dollar base into a US dollar. It was very difficult to calculate land values. You know, it could be anyone's guess. But as soon as you hit dollarization, things stabilized right away. And in dollarization, we were able to acquire land at sort of between $3 and $10 a square meter for prime, urban, zoned, city of Rori, capital of Zimbabwe land. Today, that same land carries a value of between $20 and $80. And I would still say it's a huge, significant discount of the region's capitals. If you look at, you know, you go to Nairobi, Kenya, which is a much more developed, stable market. You go to Dar es Salaam, Tanzania, you are paying close to $1,000 a square meter. So the opportunity for the upside on land is still very huge. And the question is just your appetite to wait. You know, some of it you can develop, and we are developing it. We have in the pipeline the Mall of Zimbabwe, which is fully now resolved in environmental issues. We went through a lot of court cases in the last 3 years, and we had some over-anxious competitors trying to stop us. And we've succeeded in all the courts and won a lot of cases, and we're now ready to start building, but we don't believe the economy is right to handle a $100 million mall yet. And our partners in South Africa, the McCormick family, have successfully built like 58 malls. And I'll just say this about them. John and Jason McCormick. John is the founder of the company, and they were at an investment conference last year in Johannesburg. And they said they'd left no less than 7 African countries because they were asked to pay bribes. And when they came to Zimbabwe, there was absolutely no corruption. There was no requirement for them to pay anyone any money. They were welcomed as an investor. We sold them 50% of the asset. And they are committed to building the Mall of Zimbabwe. And they've built 57 malls. They will build the Mall of Zimbabwe, there's no doubt. Question is just time.
Okay. Don't you think somehow that the real estate game is a very overcrowded trade? Do we have the affordability among people that you're trying to sell these developments to? Is there affordability, particularly in real estate? I mean, one would think that if there is a sector that is sort of diverging with the direction of the economy, it is the residential real estate. If you drive today in Harare, the rate at which residential developments and houses are being put up is just astounding. What is supporting? Are there fundamentals for that?
So I'll answer that in two ways. The first one is the waiting list of homes in Zimbabwe is 500,000 people on the government waiting list to be allocated homes. There's a huge housing demand in Harare of rural population migrating to the urban capital and not being able to buy a house. So the government is under huge pressure to allocate stands and allow people to build homes. The second part of that is, in the Zimbabwean equation, the most important priority for an indigenous Zimbabwean is to educate his children. The second most important priority is to provide a home.
Yep.
And they will buy the land and over a decade slowly build up the home. Put the foundation the one year, the next year the walls, the next year roof, and so on. And they take great joy and pride in making all sacrifices to complete their home. So I do believe 500,000 homes are going to enter the Harare market in the short term. And most of that is funded by cash. And that leads to the second answer to your question, where does the money come from? In a structured market, of course, there would be mortgage capital available. And Zimbabwe does have some limited mortgages, but it's not the majority of purchases. The majority of purchases are actually cash. More than 80% of real estate sales, both for land and finished product, is cash. And where that cash is coming from, interesting enough, is from the diaspora, which at a macroeconomic level is an interesting scenario. Zimbabwe survived all these years for one reason alone. That's because the diaspora remittances are in excess of $100 million a month, sometimes as high as $200 million a month. So the diaspora is actually keeping Zimbabwe alive.
Yeah.
And a lot of the people, there's 3 million people living out of Zimbabwe, which is close to a quarter of our population. And that quarter sends the money back home, and in a lot of cases, it's used on consumptive support for food and medical, but and education. But in a lot of cases, it's savings that people have made outside the country, and they send back to the relatives and say, "Here's $5,000. Go and buy a stand.
Yeah.
Here's another $5,000. Put up the walls now." And that money keeps coming in, and that's why we see the development happening, as you've noted.
Yeah. Yeah. Wayne.
I just think it alludes to a beautiful intersection with fintech and disruption, to be quite honest, because I think with the volume of remittances happening not only from South Africans into Zimbabwe, or Zimbabweans living in South Africa passing money back, and just some fascinating conversations I've been having recently in terms of what technology people are using. And I think Kenya has taken that market lead, and M-Pesa is probably one of their best brand exports. But the opportunities are astounding in what technology and entrepreneurial examples can come from, how to actually solve what you've just talked about. So is Western Union, and no offense to anyone attached to Western Union at all, but is that actually the most economically viable and efficient way of transferring money into, be it education, housing, or actually investing for returns? Does that, it sort of leads me to thinking how we take advantage of that opportunity.
Yeah. Yeah. We just need to edit it. Western Union, our job at sponsors.
I love Western Union. I've used them. It's just, are they being disrupted? And I think we're seeing that left, right, and centre.
Oh, fair. I just wanted to find out from you. Now, I think that the Reserve Bank has made announcements that they will increase the supply of bond notes. How is this going to alter the investment space, and where do you think, if I'm sitting here and I've got $50,000 or $100,000 staged up somewhere and I want to move it to the Zim, what is your advice, given the stance that the Reserve Bank is taking, and what is the impact on the economy?
I'll let Nkosana go in there.
What I was saying, I mean there's another program also in addition to that the Reserve Bank had come up with, where not only they are increasing the liquidity, they are also giving us fund. Like, I'll give an example. In our case, in mining, whenever we remit our gold to the Reserve Bank, they pay us the going rate. Then on top of that, the government then gives us an additional 5% for the ability that we are an exporter. Yeah. So they alone, that 5%, that's added to my bottom line. Okay. So what I've seen, if you have, let's say, if you have 100,000 sitting out there and you're trying to bring it to Zimbabwe, if you're willing to do the long game, there's not only going to be the rate that you're going to get, there's that other incentives that the government has been trying to prop up the economy that's going to give you. So you can take advantage of that, and this is the right time to take advantage of it.
Sure.
And we've been taking advantage of it, and it's been helping us tremendously.
Yeah.
You know.
You want to come in there?
Yeah. I'd like to add, we talked about agribusiness and the returns that can be realized from financing small-scale growers as well as large commercial operations. Without going into the history of the highly controversial and difficult land reform program, let's look at the result of it today. Just in one sector of the economy in agriculture, tobacco, we have 100,000 growers, small-scale growers, that are now empowered through the land reform program to grow tobacco. They were not there previously. Those 100,000 growers are earning good money from the agriculture produce that they sell. And 100% of that produce is exported. 100% is foreign currency proceeds. Those are the proceeds that you need to be able to mitigate your risk. So my advice to anyone investing into Zimbabwe would be to come with your eyes wide open and understand that for any investment, inward investment, you need to calculate really two things: how to get into the country and how to get out. If you can't calculate that, then it becomes a no-go. Yeah. And I think the key, getting into the country is easy. We've liberalized the economy, the market is open, all exchange controls are relaxed, the government is continuing to reform a lot of regulations and make it easier to do business in Zimbabwe. As you've heard, there are several plans to cut down a lot of red tape and time. So getting into the country is not the problem, it's getting out. And if you have some fungibility like Old Mutual, then you have that access to get out. But if you don't, you need to hedge your risk by partnering with an export-based company. And my recommendation would be to look at agriculture seriously. Yeah. I know a couple of people who are looking at ventures. I'm going to open the floor. If you have any questions, you can shoot. Any specific or general questions. But otherwise, I just want to throw back to you and say that from a perspective of 2018, I have to go back to Zim, so just be careful. What are your perspectives, the election and beyond the election? Because I get a sense that as well, pension funds are behaving like they were behaving in 2008. It feels like they have a sense that we will have a replay of hyperinflation.
Well, the African elections tend to add a lot of unnecessary stress to the investors. Yeah. But what one must look at is that sometimes a lot of that risk that investors are trying to be compensated for really is not based on anything but fear. Yeah. So to some savvy investors, we look at that and say, okay, everybody's fearing, and we know this is just an irrational fear. It's good for us that our returns were being compensated for risk that we're taking. That's not there, So 2018 is beginning to give that sort of sense, but there are some that have the gut that we have, that we're saying, okay, this is the time where we strike. This is actually what the time when we're moving into certain areas, because we know there's going to be a lot of return that just will be, we are being compensated for the risk one, which is unwarranted.
Fair. Is that Hopper? Yes.
Yeah. This is Hopper Mao. My question is directed at Gosana in the mining sector. I just wanted to find out what's really driving your returns. Is it the level of pricing in the sector, or is it actually the cost? Because when you look at it, investors are not really, at the moment, they could just get access to the assets through other means, through like exchange traded funds, and through other physical, not exactly physical assets. So I was just wondering, in terms of you investing in physical assets, how have you been actually been able to drive the returns?
Thank you very much. In our particular case, I'll give mining, for example. You know, when we came into Zimbabwe in 2014, a lot of people were fearing into that sector. So we're finding a lot of good mines that were undercapitalized and also undervalued. So then, what we did then, when we moved into that space, we added capital into it, changed management around, came up with a different strategy, and that just cleaning up, the little cleaning up that we did gave us a big intrinsic return in doing things properly, making sure your management is following the strategy that you're laying down. The fact that those assets, we got them for a huge discount and were able to then utilize them is what really drove the return. I hope I answered your question.
Yeah, I think I get the drift from where you're coming from. I'm going to ask another question to Ken. Often there's a disconnect between buyer and seller prices, especially in the property sector. If you just go through the classifieds and you look at the prices, normally what you see are mostly what I would call inflated prices. But when you look at the actual transactions that take place, as in the actual exchange of money, there's a bit of a disconnect. How have you been able to navigate through that kind of disconnect and the basis risk that comes through with it?
I think your strategy has to be very clear to start with. And we took a view probably about 2 years ago that our strategy was a long-term hold. So we are not desperate sellers. And therefore, you know, there's an inherent cost of the land, which I mentioned was between $20 and $80 today in Zimbabwe. Your fixed building costs are pretty much similar to the regional prices. You could compare them to South Africa. So you have a cost of your product. And you know, if you're not funded with equity and you have pressure of debt, then perhaps you would be more desperate to sell. Fortunately, we've completely exterminated all our debt, and we are 100% equity company. So we can hold our assets indefinitely. And therefore, you know, the buyer question to us is less important as to other sellers. I do hear what you say, and there have been some desperate sales. I think a lot of assets were sitting with various banks and they ran into liquidity problems, and there was a disconnect there in selling some of those assets. But I do believe that is, we've moved on from there. I think the bigger problem today in the market is really what I was talking about earlier, which is the availability of real US dollars externally. And you'll find buyers that want to access those US dollars would significantly discount the asset in Zimbabwe, as they would with anything. If Old Mutual is selling at 100% premium in Harare to London, you know, what more would you expect a property to sell for? So there is going to be a discount. It's a buyer's market at the moment. It's clearly that's the case.
Thank you. Any other questions?
Name is Stephen Magora. I'm with Credit Suisse. I think the most practical source of I think funding is likely to be kind of individual investors, right? Because I mean, if you start to look at corporate funding and institutional investors and stuff like that, then your political risk and all those things kind of start coming into the fray, and you're likely to kind of run into problems. I think the biggest challenge, right, which I'm not sure whether we've quite addressed the challenge to date, is we can't all go to Zimbabwe and assess for ourselves and find out what are the best things to invest in, and actually, what are the safeguards, how do I not lose my money, and all that kind of stuff. So I think what would be really, really important is to have maybe an intermediate company that actually kind of aggregates all these opportunities and then provides the safeguards. Because I think what you're going to end up with, if you do it properly, is hundreds, thousands of people investing almost in a kind of crowdfunding type arrangement, where everybody comes to the front with, I don't know, £50, whatever it is, right? Then you invest in something. I think we're just lacking that. I'm not sure whether there's enough transparency around these opportunities. Actually, what are you going to get? What are the returns going to look like? What are the safeguards? Cases of lawyers running away with money and all that kind of stuff. How does that not happen when I give you my money? So I think that's probably one of the key challenges that we need to address.
I think we have a business case there, gentlemen.
Yeah.
Yeah.
You could invest in private equity firms like ours. There's that have teams that are down there in the ground that are going to do the due diligence, and we're going to protect your investment and are very transparent. We're going to give you a return. So there are lots of avenues of that nature. Yes, there are some bad apples that you hear that then spoil the whole bunch for everybody, where you try to do it by yourself. You invest in a particular industry. Now, what I've seen, a lot of people, they do that and then they don't really take the time to study the area they're getting into. They want to do it from London, invest there, and then watch and see. And sometimes a lot of people have been taken advantage of. But if you do it through proper facilities, your investment is protected, and the laws in Zimbabwe actually will protect you.
And to his point, I know we were meeting with Zamco, who stand in for the Reserve Bank. They've managed to mop out close to $960 million of distressed assets from the banking sector. And by the same token that the capital that we're seeing in Zim is coming from diaspora, part of the money that will finance and buy those distressed assets will be coming from here. But then there is always a difficulty, as you said, of how do you perform a due diligence on a company to say, can I buy debt and convert it into equity? Are my rights and my interests well represented? Even if I'm to have a board or a management appointee, who can I appoint? And I think it's a very fair question, and I think it actually prompts a good business case for people.
And I think you alluded to the fact that the rule of law is quite important. There's an element of trusting that there is a support structure in the businesses that you're investing in. And you trust a person that you work with, and you ultimately put a lot of weight on knowing that the system supporting you is there. I was at the Loan Market Africa conference in Johannesburg about 4 weeks ago. And that was one of the fundamental provisos of understanding the terms and conditions of 90% of the complex structures that are being used to fund a number of these investments. And these are complex things that Credit Suisse probably has an abundance of professionals that do these structures, or legal representation or support structures, to actually help you understand what you're doing, how you're doing it, and what your recourse is if things go wrong. So you sometimes might not be able to go that granular in every transaction, but you need to know that the partners that you're working with are.
Yeah,
I would answer that in 3 ways. First, you look at your investment. Is it government risk or country risk that you need to mitigate? And if it is, then you have to look at the legal structures. And there's a lot of BEPA agreements that Zimbabwe has, protection agreements, and with certain countries. And I would recommend looking at a jurisdiction that has a BEPA investment with Zimbabwe to protect your investment. If it's a private investment, as Candace says, there are a lot of specialists. We have all the top law firms represented, the top accounting firms are represented, and they can easily conduct a legal and economic due diligence for you. But I agree with you. The key on private sector investment is really who you know, and having the local contact. Local knowledge is everything. So going in on your own is a much higher risk. Going in with a partner, Kusana's there already. He's obviously established a network. You'd have a much higher chance of success by going in with someone on the ground. And the third one is really just the business case opportunity. What you say is really true. I mean, there's an opportunity for a fund to be created just in real estate alone. We would welcome a fund to be created where people could participate with £1,000 investment and own commercial real estate in Harare and get a good return. So I think those things are there.
Yeah. Thank you very much, gentlemen and ladies. I know we're running behind time. If I can have just one more question and then we'll wrap up this panel. Yes, ma'am.
Hi, I'm Shalini Daya from Clever Chance. What I'm interested in knowing is how both Kosana and Ken, as local investors, you see sort of the Chinese involvement, whether that's had any positive impact on your returns, or in terms of the opportunities that come across to you, or has it had no impact?
if I would answer that, in our case, the impact that is coming from the Chinese investors, the access to cheap credit, and we could. My venture capital, we're funded mostly from Chicago, so it's a private equity group. So most of our funding comes from Chicago. I couldn't get the cheap debt that they were getting from China. So they were coming already at an advantage, and then that's where you saw that boom of a lot of Chinese backed entities starting up in Zimbabwe. So I guess availability to their cheap credit was a little bit of a competition. But now, again, in Zimbabwe, there's so much room for growth, and there's so many areas that are underfunded that even with that, there's certainly other areas where you could put your money and still realize good returns. Okay.
Yeah, I think from my exposure is we've had several discussions with various Chinese companies, and unfortunately it's just been that a discussion. I think the tier one companies in China, and Sina Hydro has invested in Zimbabwe several hundred million dollars. They're rehabilitating our hydroelectric, is a tier one company, and there's nothing wrong with them. But there are a lot of less scrupulous and higher risk takers that come into Zimbabwe from China. And unfortunately, their mentality is really an extractive one. I haven't seen a lot of benefit, to be honest, to the economy. They have talked about, between $10 and $20 billion of support, but just like any investor, they want to see stability. And they want to know what the horizon has for the next, 3 to 5 years.
Thank you very much. Okay, just one more, yeah.
Oh, thank you. I mean, when he made what was that a question or a comment? I thought it was an opportunity for me to maybe pitch our business idea. So I'm gonna take this opportunity. So what we've done as a group of diasporans is to come together and create a fund, if you like. So we've pulled resources together for purposes of investing in Zimbabwe. We call it the Zimbabwe Diaspora Investment Group. And I think he made some points which I thought, are almost our blueprint, because it talks about a crowd-funded model, if you like, and that's where we're sort of driving towards, where we identify projects or opportunities in Zimbabwe and then open that to perhaps a select group, as opposed perhaps to a more public offering, if you like. And then have a panel in Zimbabwe that does the due diligence. But I think one of the things which he points out is that there's a lot of, if you like, fear on the part of diasporans in terms of putting resources in projects in Zimbabwe. And what has been lacking in terms of, at least from where I'm standing, is a project or a program that's driven from diasporans themselves. Because what's happened in the past is projects have come from Zimbabwe, or people have pitched projects from Zimbabwe. But I think there's a difference if a project is driven from the diaspora. So ours will be an online portal, if you like, where projects can be posted, and then diasporans can identify opportunities and then go in as a group. And particularly real estate, is an area of focus, and healthcare. So I make this, publicly, so that, if there are others that are interested, we could have a discussion. But thank you for this opportunity.
Yeah. Anyway, let's give a round of applause for our panel.
So just a closing word,
yeah,
Madiba's
sure.
words, it always seems impossible until it's done.
Yes.
Zimbabwe is open for business. Thank you.
Thank you for that. Can we come back at